Alrighty, so let's dig into actually looking, at how these flip zones work in reality on the charts. Now, before we kind of dive into that, just kind of want to let's keep things simple, right? Let's not overcomplicate it because it can be very easy, as always, to overcomplicate things in trading, right? So, with supply and demand, let's say for demand, what we typically just trying to look for, we're looking for where was a bit of a pause in price action, right? A bit of a consolidation or a range, and then we want to see a clear injection of demand into the market, right? Where there's that overwhelming imbalance between supply and demand. Typically, that will have, a bit of a decline to it. That's sell before the buy with demand, and then we can draw our demand zone on the whole range, okay? Or of course, we can refine it to the bottom, and likewise for supply. So, for instance, when we have demand, let's say we bring price back to, I won't just bring it back, but like here, at this moment here, when we have the sell candle and then the next candle closes above its high, right? So when the market is at this point here, ignore the rest of the price action, it's valid demand, but it's not valid demand in the way we look at it, right? It's not an institutional zone yet. It's not a strong zone. Again, whatever name you want to call it, doesn't really matter, but we wait until it has at least broken structure. Once it breaks structure, then we can look back and go, okay, now this is a demand zone I would draw on, okay? So when the market is back here, I'm not going to draw this on. Once it breaks that high, now I'm going to draw it on because now it's, institutional demand, right? That's what we've been doing. That's what we've been looking at, zones that break structure. So when it comes to flip zones, there are always going to be zones that break structure because what we're looking for essentially is, in its most simplest form, you'll have price moving to the downside, okay? There will be supply that caused a break of that low, right? Then price will pull back into that supply, and our expectation would be that supply would hold and it should do its job. It should form a lower low. But sometimes what will happen is you'll get that initial reaction. And remember, the reaction is key. We need to know that those orders have been filled to validate that, there was a decent amount of supply within there. But then what we want to see is that reaction not break the low, ideally, right? We want to see price then step into the market where that demand overpowers supply, okay? And in that instance, where is the demand that flipped supply? Well, we can take it from the top of the reaction to the bottom of the reaction, right? And then that becomes our demand zone. And we call that a supply to demand flip. And we can draw it on the whole range, or of course you can refine it, to a single candle pivot within that. Okay, it's up to you. When that happens, remember there's two things. There's one, there's the actual break of structure. So that would be, say, over here, where if you draw on your structure breaks with the thick black line, they're your two pieces of structure, okay? Because we had the movement down, the pullback, we broke structure, we came into supply, we reacted, we failed to break structure again, and then demand stepped into the market to overpower supply and to break structure there to the upside. So you see how, as long as you're always looking for zones that just break some form of structure, then you already have a strong zone. So even if you're not maybe very good at spotting flips, or even if you never even knew what a flip was, as long as you're always just looking for a zone that broke structure, you're going to be generally fine, okay? So that's why, flips is just having a bit of a deeper understanding of what's going on, but it's not necessarily a completely different type of zone because it's always going to break structure. The only kind of difference is if, let me get rid of this bit here, is when price reacts to supply and we push down, and then price closes above the reaction, right? And that's where you get the failed reaction because the reaction at this point has failed, right? Where we get the FR line, so the failed reaction. At that point there, yes, we have a flip, but this is where I would not look to enter on this demand zone. Why? Because remember, I need to see the break of structure as well. Once that happens, okay, now I'm happy to look to trade from this zone, okay? I need to see the break of structure as well, okay? Cool. So let's take a look at this. On the chart. So we're on the daily chart here on euro dollar. What's the first thing we do with a blank chart? We go to the highest time frame that we use and we draw on our current swing structure. That's always the first thing you do, okay? So if I kind of look at it, zoom out a little bit, you can just look at the obvious structure, swing lower low, swing lower high, swing lower low, swing lower high, swing lower low, and then we obviously come up and we've broken a high and we have shifted bullish, okay? So that's the last swing breaker structure that I can see. So I'm going to draw that on to know what current swing range we are within. Now, since we broke that high, we did have a bit of a pullback here, okay? And then it's kind of just trickled up. So whether you view that as a daily swing pullback or not, relative to recent price action, again, if you don't have a fixed mechanical rule and you use a little bit of discretion like I do, then it's a bit debatable. This is near to where we currently are in live price action, and I personally viewed that just as an internal pullback relative to recent price action, so I didn't view that as a swing pullback. But again, if you did, it doesn't massively matter, okay? Because let's say you did view that as your swing low, right? So that was your swing boss there. If price then did come down and break it, okay, fine. You can view it as bearish, but just be very wary of the fact that it could be just a bigger move of that pullback to continue higher, right? But anyway, hopefully you guys should be kind of familiar with that from the other lessons. So we're bullish. What do we expect after a swing break of structure? We expect a swing pullback. We've obviously been moving for quite some time now. Let's see. Over a month, about a month and a half. And we still haven't really had that bigger swing pullback. Remember, I said that before. When you get those first initial trend changes, very often price can move for quite some time before you start to see a bit more of a deeper pullback. But we are starting to move quite correctively, so I wouldn't be too surprised if potentially we get something soon. But until you see that bearish shift in structure, until you see demand start to fail, we can keep following that bullish order flow. You just have to be a bit careful with your expectations of how far you're expecting this to go, okay? So yeah, first thing we can look for to obviously anticipate a pullback is to see that structure shift. That would be that bearish change of character there, or you've got a bit more of an internal pullback there, right? And I would be looking for sort of that daily low, that daily internal structure low to go if we got it. Okay, what's the other thing that we can look for to anticipate the pullbacks? We can now look for daily supply. So where we currently are, if we look left, what are we reacting to? We're reacting to this daily supply over here, right? It's valid supply because it broke structure, right? It led to a move that broke structure, even broke these lows here, and the next candle obviously closes below it. So originally you could have had it drawn to both, but as we push in deeper, you can just refine to that candle there, right? So that's obviously valid supply that was starting to react from. In terms of demand, we also have this demand range here, right? That last pivot. Okay, and this is what I was saying. You can see how you've seen the bullish order flow, right? Moving to the upside, pullback, moving to the upside, pullback from supply. We've mitigated this demand range, and it's now looking like we may be continuing up to take out this weak high. So it's looking like the bullish order flow may continue, right? So here's kind of another simple tip I want to give you before we really dive into it about flips is generally what you want to do is just keep it simple and just look for structure zones like we have been. Like look for where the pivot is, look for the movement up. It broke that high. Okay, cool. You can draw on your range, or of course you can refine it to the pivot zone within that, right? Just like that. But all you're doing is you're training your eyes to see where's that pivot? Did it break the high? Yes. Okay. Price closed above it. I can draw my zone on. Then what you want to think about is sort of if you want to ask yourself, well, is it a flip? The way you do that, because basically there can be very complicated examples sometimes is what I see, common errors in the Discord. So this is, I think, maybe a way that might help you to simplify it. Draw on your zone, like I just said, look for a normal structure zone, and then ask yourself, where did that pivot start from? So where did the reaction, where you start to see that sell before the buy, where did that start from? What are we reacting to? And that's when you then look left over here, okay? And you can say, what did we react to? We reacted to a pretty clean valid supply zone, right? So what that shows you is if you draw that on and you drag it across, okay? Now, is this valid supply? Yes, we have the buy before the sell, closes below that's low, and clearly leads to a break of structure. So a very, very clean zone, right? A lot of momentum came in. So that, to me, would be a very decent supply zone, okay? Now, when we were back here, remember, like we said, that's when we're expecting potentially price could pull back up into it and continue a lower low. It ends up rejecting here instead. Okay, fine. So then when we switch bullish over here, these old, fresh, unmitigated supply zones become what? They become reaction points for pullbacks. And that's what we got. Price came into that supply level. It filled up the orders because remember, the reaction is key. This here, it's not a very big pullback, but that is a reaction, right? It shows that supply was filled and it, pushed price down a bit. But what did that reaction fail to do? It failed to do its job. It failed to break any structure, right? It failed to form a lower low. It didn't do that. So what happens is you get the reaction initially, and then demand steps into the market to overpower supply. Okay, so you see into supply, the reaction, and then we break. And as soon as we get this daily candle closure here, right, that is your failed reaction. So I can draw it on for you if it kind of helps to spot it. But that would be your FR line, right? Your failed reaction. So the way you essentially view this, if it's a little bit confusing still, because this might be foreign to you and a bit new, is again, try not to overcomplicate it, because it can feel like there's a lot of moving parts, but it's literally like, is this a valid supply zone? Yes. Okay. Price comes into it, it reacts, it fills up some of the orders, but it fails to do its job. It fails to break structure. So then demand steps into the market to overpower supply. Okay. So if you want to draw on or basically you get the flip is confirmed once we have the failed reaction. Once price closes above the reaction, that is your reaction failed. And then if you want to draw on your demand, so your supply to demand flip, right, you can draw it on from the top of the reaction, right, where the reaction starts, down to the bottom of the reaction. So you draw it down to that low, and of course you can drag it across. And that whole range is your supply to demand flip range. Now, of course, within that, if there are single candle pivots within there, sometimes there's one, sometimes there's multiple, then you can draw it on. But you understand, right, that it's the whole range. That's the whole range that it's within, okay? Now, before we look at the recent price action, another thing just to spot, which you can also sometimes do, and sometimes you can go really far back painting the story of the battle between supply and demand here. But if you look at this supply zone, it's valid, right? Like we said, next candle closes below it. A lot of momentum came into the market. It led to the break of these lows. But remember the way I said, okay, first thing you do is go, did it break structure? Yes. How do you then determine if it's a flip? Well, you ask yourself, where did this, the pullback start from? Where did the buy before the sell start from? What was this reacting to? Look left. Okay, there's this candle here. That looks like it could be demand. So let's draw it on. Is it a valid bit of demand? Well, it was unmitigated. The next candle closed above it. And what did it lead to? It led to a break of structure, right? So when price is coming back down into here, you would expect if demand's going to do its job, that price should go on to break the highs. But what happened? Price came into there, filled up that demand, filled up those long orders, those buy orders. The reaction occurred. And remember, the reaction is key. You can't just smash through. We need to see the reaction for it to be flipped. There is a reaction, but then ultimately it fails to do its job. It fails to break any structure to the upside, and then price comes down to the downside. So this in itself is a demand to supply flip, right? And like I said, you can draw anywhere from the low of the reaction to the top of the reaction, and that whole box is your demand to supply flip range, okay? And you can see we had a reaction from here, because within there, like I said, sometimes if you have a big range, there can be pivots within it. So you have that pivot zone there, and then the one that we're just looking at now, which you can refine that whole large range to, okay? So hopefully you can kind of start to see now how it's, without even structure, you can see how there's that battle between supply and demand. Demand's here because it caused a break of structure here. Price reacted to it, but supply overpowered to it. Then when we revisit it later, right, it fills up some of the supply, but demand's strong and powers it over. So now you have demand, retaking control from supply there. Price fills up some demand and then continues higher, right? So it's that constant interaction and that battle between buyers and sellers, okay? Now, this is unnecessary, right? You don't need to go back and look, what we're reacting to and paint this whole story. Like, it's not, I don't think they're really going to give you much of an edge. It's just purely me just pointing it out to understand what's going on here. And you can see how the market's moving and what's happening with the orders, right? And how price is essentially moving. But I guess the point I'm trying to make is you don't need to go and have boxes everywhere and paint the story. It's not really going to give you much of an edge. That's why keep it simple, like I tried to say at the start. But the point I was trying to make here is when you're looking at recent price action, you kind of know what at least the internal range you're looking from within. Where is the nearest demand zone? Okay, we can see the pivot. It broke structure. You've got here. Now we're just being a bit more fancy and we're going, okay, is it a flip? Well, yeah, it reacted from here, right? There's a failed reaction and that gives us our zone, okay? But if you didn't even go and look at all of this, it's not going to make a massive difference, okay? Because you're just looking at, here was a demand that broke the high, we're looking for the orders to be filled and we're looking for the continuation, okay? So don't worry if it feels a little bit over the top or unnecessary. You'll figure out kind of how you interpret things as we go on, okay? So that's the daily time frame. Let's just have a very, very simple recap before we now do some multi-time frame analysis. We are bullish. I'm personally viewing this all as one swing leg. So at some point, I'm expecting we may get that deeper swing pullback. But for now, demand is firmly in control, right? We can see this bullish internal order flow. We've just come back into this recent supply to demand flip, and it looks like we're going to continue, and it looks like we're going to break that high. But of course, we are coming off a pretty decent zone up here. So who knows? We'll have to see. So let's jump down to the 4-hour chart, right, and see what's going on here. Okay, that's a bit annoying. Sometimes these zones don't appear on lower time frames, even though I have them saved too, which can be a bit frustrating. Okay, cool. So let's hop down to your 4-hour chart and let's see what's going on. So we have our failed reaction line there. I'm just going to hide that from this time frame. And let's, again, kind of when you first then jump down to the next time frame, almost ignore everything you've just looked at on the higher time frame and kind of when you're first going through and you're doing your analysis, analyze each time frame on their own, and then once you've done all of that, then look back through them again and interpret them together, if that makes sense. So what I mean by that is now we're on the 4-hour chart, you almost kind of want to ignore the analysis that you've done on the daily chart and just look at the 4-hour chart on its own so we can find out where is the 4-hour swing structure. So here's a very clear 4-hour boss. Okay, we draw it on, swing higher high, swing pullback, swing higher high, swing pullback, swing higher high. Okay, so let's draw on our current swing range. That's our swing boss. Okay, and then let's draw on our current swing low. That's our 4-hour swing strong, and then this is our 4-hour weak swing high, right? Where are we? There we go. Cool. So again, keep it simple. Let's focus on the current swing range we are within. So this is very, 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 very horrible choppy sideways price action. And if you look at the date at the bottom, this was around December of the end of the year. So this is very typical price action, particularly the last 2 or 3 weeks of the year where volume really starts to die off and price can be very choppy, okay? When this happens, this is when you have to do your best to, in my advice, leave it alone and just try not to dig yourself into unnecessary drawdown because there's no real clear high time frame intentions here, right? This is not where big players are transacting volume. So yeah, if you're just wondering, whenever this happens, and this can happen in the summer as well, it can happen whenever, but when you notice it and you see there's no real intention, try it. This is when you have to just not do dumb stuff, get out of your own way, be patient and wait for where there's clear price action, which we'll see in a minute, okay? Cool. So swing trend is bullish. We have pulled back to that daily demand and we started to trickle higher so we could go higher. However, within that daily demand, what do we have? We have some clear 4-hour zones that potentially price may want to come back and mitigate, right? We can see that sell before the buy that led to the 4-hour swing breaker structure. There's some other zones within there, but they've already been mitigated, right? We've got that inside bar. We've got that next candle along there as well. Just zoom in a little bit. And then we got this here as well, right? You can see, so we had a bit of a demand chain going on there with a series of mitigations, right? Tap in, and then eventually we went. And then we have the unmitigated extreme, which is looking really nice as well, okay? Completely unmitigated, see that? So the two kind of clear 4-hour pivot zones within there, right? So let's play this forward a little bit and see what goes on. Okay, so we've impulsed down and we've come into our 4-hour demand zone. So this is where we can potentially now look to see, will the 4-hour swing trend continue? Are we going to form that 4-hour high low? And are we going to continue to the upside? We obviously know we're within that daily demand as well. So, let's see. Let's drop down to the lower time frame because essentially what we're doing here, sort of the trade plan I'm going with you guys, is daily 4-hour and M15. And we're kind of using the M15 primarily to trade the 4-hour time frame, to trade the 4-hour ideas. So if you want to be someone who enters on the M15, which would be probably my advice for 90% of you, particularly when you're starting out, the highest strike rate you're going to have and the most probably success you're going to have is if you do it when price is in a 4-hour POI. When the 4-hour is in its most sort of probable scenario, that's when you then want to drop down to the M15 and use that for timing and entries. Now you can trade the M15 and all other parts of the move, but the highest probable bits of it is going to be the turning points on a 4-hour chart, right? That's going to be the best time to then actually go and look at your execution time frame. So that's what we can do now. Now that price, because we waited and be patient, now price is in a high probable area in the 4-hour chart. Now we go look at our lower time frame, right? And that's going to be the best time.